Ladies and gentlemen, good day and welcome to Nazara Technologies Limited Q4 and FY21 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nitish Mittersain, Joint Managing Director of Nazara Technologies Limited. Thank you, and over to you, sir.
Good morning, everyone. This is Nitish Mittersain from Nazara. I would like to start off by wishing everyone good health, as that is what is most valuable to all of us in these times. Nazara was founded 2 decades ago with a dream that India will one day become a large gaming nation, perhaps top 3 in the world. At that time, the business of gaming virtually did not even exist in our country. Over the years, Nazara has adopted business models which ensured that the company continued to scale revenue profitably, and as we entered what I like to call the decade of gaming in India, we have accelerated our growth through addition of high-growth business verticals such as esports, sports simulation, and gamified learning within the overall gaming umbrella. These efforts of the last few years have helped us reach an important milestone in our journey, where today we at Nazara are having the privilege of hosting our first earnings call as India's first gaming company to go public. At Nazara, we continue to relentlessly pursue our original dream and have evolved a DNA that we believe will allow us to endure over a long period of time in a dynamic and fast-changing business to attain and sustain market leadership. As this is our first earnings call, I would like to share with you a few aspects of how we operate. We have a strong focus on cash flow driven, profitable operations across our business lines, strong understanding of unit economics instead of chasing vanity metrics, and a diversified platform by product and geography that makes us very resilient to disruptions that are often seen in our industry. We intend to continue operating asset-light businesses with little or no debt and operated by strong management teams. In addition, I would also like to talk a little bit about our Friends of Nazara ecosystem that we are building, as it has been a critical step towards building the best management team in gaming in India, comprising of passionate founders and experienced professionals, all coming together to work towards a common goal. The Friends of Nazara network is a network of gaming companies where Nazara acquires majority stakes in fast-growing gaming businesses with growth potential and possible synergies within our network. The management in these companies are also given some equity in Nazara to bring a common alignment of goals, and day-to-day operations continue to be run by original managements, while Nazara helps connect the dots to create significant additional value for all stakeholders. We have seen multiple success stories emerging out of our Friends of Nazara ecosystem in recent years, which include Nodwin Gaming and Sportskeeda in esports and Paperboat Apps in gamified early learning. Enthused by our collective success and learnings in last few years, we intend to continue building out the Friends of Nazara ecosystem in FY22 and beyond. Coming to the numbers, which is the primary reason we are all on this call today, Nazara delivered 84% growth year on year, up from rupees 2,475 million to rupees 4,542 million, a 508% growth in EBITDA to rupees 596 million, and a profit after tax of rupees 136.36 million. As the famous quote goes, revenues are vanity, profits are sanity, but cash flow is king. I am happy to share with you that Nazara generated a positive operating cash flow of rupees 674.06 million INR in FY21. While we are happy with the progress in FY21, the reality is that there is a lot to be done to make our mark on the global gaming map, and we will continue to pursue our goals with the support of all our shareholders with conviction, positive thought, and positive action. I would like to conclude by saying that today we carry in our hearts the Olympian motto of faster, higher, stronger, as we see the dream of India becoming a top 3 gaming nation in the world materialize over the next few years. Now I will request our CEO Manish Agarwal to deep dive into our FY21 financials, and we look forward to an interactive session where we can answer all your questions thereafter. Thank you very much.
Thanks, Nitish. Good morning, everyone. This is Manish Agarwal here. I really thank all of you to join on our first earnings call. All of you have been a great support for us during the IPO, and I would like this session to be very, very interactive, and hence I will keep my opening remarks very short. I'm pleased to share that the foundation laid in FY22 has started demonstrating traction in all aspects of financial and operational parameters. And we are very pleased to say that we have built a very strong platform for Nazara to scale its revenues profitably. I'll just pick it up from where Nitish left. We grew 84% in our revenues. We delivered 454 crores or 4,542 rupees million in 2021. Our revenue growth is commendable because it is coming on top of very positive unit economics, predictable growth in gamified learning, and very strong performance of media rights licensing business in esports. That really kind of sets up a very strong platform for us to really grow from here. And we have that's what has resulted into a strong cash flow generation from operations, as Nitish shared, that is something which we are very, very cognizant of, and we keep a very close watch. We delivered a cash flow of 674 rupees million in FY21, and that is where the strength of the business really kind of is reflected and demonstrated through unit economics and the efficient cost management. Our cash and cash equivalents today are rupees 4,784 million as of 31st March, compared to 2,224 rupees million as on 31st March 2020. As you can see, the business has generated free cash, has added more cash on balance sheet, and we continue to be debt-free. All our subsidiaries have positive cash flows, and they've added money in FY21, which is where is a very strong underlining of Nazara and Nazara DNA, which we have been able to work very closely with founders who have joined us in Friends of Nazara Network. The efforts have resulted into a 37% increase in our net worth to 7,790 rupees million as compared to 5,700 rupees million in FY20. That is also on account of investment into Nazara of 100 crores by Investment Growth Limited, an arm of Hornbill Capital, and investment by Crafton into Nordwin, which happened in both of these investments happened in January of 2021. This is a high-level summary, but what will be of interest is to move into how we see our businesses. As we have interacted with some of you or most of you, we look at our business into 5 segments, and I will take you through the segment-wise performance so that you can really get second level of detailing on what is happening and how the business is really shaping up. Gamified learning, which runs Kidopia as an app, it's a subscription business model. The consumers are in North America, and 90% coming in US. This business contributes to 39% of total revenues. This business grew by 819% year on year and posted rupees 1,758 million in FY21. However, just to also baseline on apple-to-apple comparison, In FY20, the consolidation was done only for 3 months, and hence, if you were to look at apple-to-apple comparison, Paperboat Apps, the company which operates Kidopia, grew by 202%, where their FY20 number was 582 million versus 1,758 million in FY21. So they have grown 200% in financial year. As a segment, the growth is higher because of the 3 months of consolidation. What is more encouraging is, as we had outlined in our IPO roadshow process, that this is a very strong unit economics business, and the marketing cost is the only true variable cost and the long-term retention is creating a very strong annuity business and a profitable business. This is demonstrated in our EBITDA numbers of FY21, where the overall margin is 7.1%, which was minus 18% in FY20. The segment delivered 125.7 million rupees of EBITDA versus negative of 34.6 million in FY20. So not only it has grown very strongly on EBITDA and on top of unit economics numbers. Now, what is really kind of leading it? As I mentioned, it's a good annuity business because you have paying subscriber base, which you can predict how they are looking at it, how they are growing, and how are they being retained on the network. Kidopia had 340,000 paying subscribers, which is growth of 72% year on year compared to March 20 numbers. The strong unit economics, which I mentioned earlier, is reflected that our cost of trial, in spite of scaling, has been range bound between $22 to $26. Our monthly churn has been range bound around 4 to 6%, and our ARPUs are in the range of $6.3 to $6.4 per month. So the unit economics have not regressed in spite of a 200% growth in revenues or 72% growth in paying subscribers. So that's the gamified learning segment, which operates Kidopia, and it contributes 39%. I'll move to the next segment, which is the esports segment, which is a fantastic intersection of sports and gaming. And it's really going to create a very fast-paced sports entertainment, and that's what our excitement around esports is, that this is going to really be disrupting how sports entertainment happens in years to come. This segment grew by 102% year on year and posted 1,700.6 million INR in FY21. The segment contributes to 37.5% of total revenues. The segment not only grew by 102%, but also grew margins from 8.9% in FY20 to 17.9% in FY21. That's a very strong growth. And in terms of absolute EBITDA numbers, it grew from 304.8 million INR from 74.8 million INR in FY20. So our kind of belief and conviction around esports continues to be very strong, and we believe that this is a segment, as the underlying market grows, this segment will continue to grow and engage with the young millennials and Gen Zs in years to come. This segment has two key properties. One is Nodwin Gaming, which contributed to 1,357 million out of 1,700 million in this segment. Nodwin Gaming grew 75% year on year and also grew its EBITDA from 87 million INR to 132 million INR in FY21. The core contributor to growth in Nodwin has been the growth of the media right licensing. And as we have always communicated and explained, that this is a business of creating premium content and working with OTT platforms and TV broadcastings to ensure that they get content which is engaging for the millennials, and they pay us for that premium content, exclusive content. So 55% of our business is coming from there. We have also expanded into South Asia in FY21 with our partnership with Tencent, and we continue to be a dominant player in esports in India through our IPs like India Premiership, D Arena, etc. The second property which we have is Sportskeeda, which is the largest esports news destination for esports fan, and also has other sports, and it is the India's largest multi-sports destination and second largest in cricket destination here. It has been a fantastic performance for Sportskeeda in FY21, where its revenues grew 142% from 142 million rupees to 343 million rupees. However, even more notable is the growth in the EBITDA, which grew from 13 million, 13 in FY20 to 167 million in FY21. How have they really delivered that growth? They've delivered growth in revenue because of 487% increase in their monthly active users in 1 year. And they've really looked at how to leverage the ad inventory maximization through a small shift in the value volume equation between India and US. And also have really very strongly optimized their interactions and their integrations for the programmatic revenues. So this has been a very, very notable performance by the Sportskeeda team. The third segment, which we look at, is a premium segment where it's a free-to-play mobile game from which consumers can download from App Store or Google Play, and the monetization happens through advertisement or people buying virtual items. We have World Cricket Championship as our IP, which is a cricket mobile game which simulates how you play cricket in real life. It simulates exactly on your virtual screens. This is the world's largest cricket simulation mobile game, and the company continues to really be the market leader in the cricket simulation mobile game. The revenues have been flat. The notable thing here is the mix of the revenue has changed from advertising to in-app purchase, which is where our conviction is that this property will break the orbit once the in-app purchases really starts kicking into the consumer habit in India as well as within the game. And that is the very, very early green shoots is what we are seeing of in-app purchase increasing, and we are constantly working to make that happen. The EBITDA margins in this segment declined from 33% to 22% on account of much lesser capitalization of manpower, as our games which were in development like WCC3 were launched in June, July last year, and hence the capitalization block has really reduced. And that is the only reason for reduction in the EBITDA margins. I'll move to the fourth segment, which is a telco subscription business. Telco subscription business contributed to 16.5% in FY21. The contribution has come down from 33% in FY20 to 16.5% in FY21. And as we have mentioned before, the contribution of this segment will continue to coming down as the growth in gamified learning, esports, and premium happens. This business has declined by 8% in FY21. The EBITDA margins in this business declined from 25.8% to 18.3%. However, if you were to really make a distinction between operational EBITDA margins and the actual EBITDA margins, you will see that entire corporate cost is allocated to this segment. It is not allocated across. An increase in the corporate cost has led to the decline in EBITDA, while at the operational level, the EBITDA margins continue to be strong. We have acquired a Disney contract for exclusive distribution of their games of Star Wars IPs and Disney IPs on telco platforms across 101 countries. And we are looking at how to really leverage premium content in these countries to explore if we can revive the growth of this segment by very strong relationship with the telcos which are looking for engagement drivers. We would come to know in subsequent quarters whether this attempt is yielding fruits. Currently, we continue to maintain a flat growth guidance or projection for ourselves in this segment. The last segment is a sports fantasy segment where we run an IP called Hala Play. This is, as all of you are aware, sports fantasy is a very large segment. However, there have been lot of issues at the state level in terms of statutory risk, which have led to closure of businesses in states like Andhra, Telangana, and Tamil Nadu. And we have taken a call in September 2019 to kind of not get into this binary risk nature of this business. And our aim was to bring this company into profitable numbers, but reduce the scale of revenues considerably. And that's what we have kind of resulted. The losses in FY20, the company delivered a loss. Company delivered a loss of 308 million rupees versus a 24 million profit in FY21. So our endeavor is that till the binary risk in this segment is not covered, we will continue to look at break-even kind of numbers and not go for scaling of the revenues, which may lead to a lot of investment in this business, because the binary nature does not allow us to become over aggressive, and we will continue to be strategically cautious in this segment. So that was my summary for the consolidated. I'll quickly cover the quarter 4 21 over quarter 4 20 so that we can do quarter on comparison as well. Our consolidated operating revenues for quarter 4 of 21 stood at 1,234 rupees million, which is a 42% increase over 870.75 million in quarter 4 of FY20. The growth is driven by gamified learning and esports. These are the two segments which contributed to 80% of the overall revenue. And the summary is the same as which I had explained to you in the year-on-year. These two continues to be our main driver. Our EBITDA margins in quarter 4 of 21 grew from 7.4% to 11.1%. And that also delivered a PAT of 42.28 million in FY21 compared to loss of 70.18 million in quarter 4 of FY20. So the business has not only really grown in the overall year, but also quarter on quarter, it has been a very strong performance. I also want to kind of call out that our PAT performance is higher in quarter 4 21 versus quarter 4 20, in spite of some of the incubation bets which we had taken earlier. We have taken impairment losses of 23.48 million. And because of the paperboat acquisition, our depreciation and amortization block has increased by 9.6 million in quarter 4 of 21 compared to quarter 4 of 20. That was the quarter summary. As you can clearly see, Nazara is operating in high growth business segments such as gaming, gamified learning, esports. Our endeavor is to continue to grow them and grow them profitably. And we will like to not really maximize EBITDA as we have maintained in past. We will be very prudent to have a balance between revenue growth and EBITDA margins and margin expansion. We are very, very committed to maintain our market leadership in these segments which we are operating. And prudent financial management is in our DNA, which is reflected in the 4,784 rupees million cash reserves, including liquid investments we have on our balance sheet, and we do not have any debt. To conclude, we will effectively utilize our cash balance to fund any inorganic growth opportunities. Our opportunities can be in terms of geographical and demographic expansion to building execution capabilities in our domain of operation. We are in a very good position to continue executing our strategy and maintaining our market leadership position in the years to come. I would also like to acknowledge our investors, our customers, our Nazara board, and my team for their continued trust in Nitish and myself. We are very excited about the new fiscal year because of the growth momentum, strong unit economics, and profitability, which enables us to continue executing our strategy and maintain our marketing leadership positions in years to come. With that, I'd like to thank everyone for listening to both of us, and the floor is open for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sudhir Guntupalli from ICICI Securities. Please go ahead.
Hi, Nitish, Manish. Good morning. Thanks for taking my questions. If you can talk a little bit about the calendar of events that Nodwin is planning for FY22, and how do we see this segment shaping up in terms of growth and margins going ahead?
Hi, Sudhir. Thanks for asking that question. This is Manish here, and let me take this. If you look at from a Nodwin's business, events is one component of it, but the larger part of the revenue comes from the media rights and the licensing of media rights, which is our key business. And that's what we have been really working on it for last 3-4 years to increase the contribution. And what are the advantages of that? The advantages of that, as the underlying the market viewership or number of users increase, your ability to talk to more partners and your ability to increase your the contract value keeps increasing. And that is where our emphasis on media rights business. Events is a means to that end, and a very small end, because our content has 4 components. It has live events of local, it has live events of global, it has live from our own studio, and it has on-demand content. So from that perspective, the way you need to look at Nodwin business is a content business, a premium content provider to OTT and TV platforms. As far as our events are concerned, our events are our own properties like India Premiership, which has 3 seasons, DU Arena, and then we have Northeast Cup, and we are working on other properties, new properties launching, which we didn't do last year because of COVID. As the COVID situation improves, we will also explore which are new IPs which we want to launch. That is one thing. Second, we work with game publishers for white-labeled IPs of theirs, and there we are working very closely with Tencent outside India, and we are hoping that the PUBG coming back, we will be working with Krafton in India on as and when they launch the game. Besides that, we are working with all other game publishers to activate the grassroots communities. So that's the broad summary of Nodwin. In terms of what is the growth and margins, our margins are purely dependent on how much of investment we want to do in new IPs, and because a new IP gets broken even in 3-4 years. And the second thing is, how soon does the COVID really allow us to have more and more offline events, because when venue cost is, these 2 factors are an input to our margins, and at this juncture it will be difficult for us to give any idea about what kind of margins are we going to look at. If you look at Nodwin business, they delivered roughly around 11.5-12% margins last year versus 4-5% earlier year. So that margin increase happened because of no new IPs launched and no offline events, and that really shot up their margin. However, 4-5-6% is the right way to look at that business.
Got it, Manish. And my second question, given the pace at which unlock is happening in US, we may see daycares, preschools, and schools also opening up soon. So how do we expect this to impact Kiddopia user base and net user addition metrics?
So if you look at from a Kiddopia point of view, we are talking to 2 to 7-year-old kids, and these kids are in their home schools or play schools. But after that, they really are at home and they are enjoying on their screens. And our average time frame per day is around 17 to 22 minutes. It's not that it consumes their whole of the day, and it's an education classes. So it's not an education class, tuition class kind of a model. It is an entertainment model where the kids are really having fun, and subconsciously they are learning. So I don't see any impact and correlation between schools, home schools opening up versus time being spent on such entertaining apps for the kids.
Sure, Manish. And one last question.
Mr. Guntupalli, so sorry to interrupt, but for any follow-up, may we request you to rejoin the queue, please? Before we take the next question, a reminder to the participants, please limit your questions to 2 per participant. Should you have any follow-up, may we request you to rejoin the queue. The next question is from the line of Dipesh from Equirus. Please go ahead.
Yeah, hi, good morning. Thank you for taking my questions. I have two on Nodwin. Firstly, it will be really helpful if you can give a further breakup of Nodwin's FY21 revenues. That is, how much revenue you made from different revenue streams like media, data services, and various IPs, etc. in FY21. And secondly, you have highlighted that Nodwin has 80% market share in esports in India. So just wanted to understand what exactly that means, because when we see some industry reports, they say the esports market is currently $100 million in India, but when Nodwin with 80% market share has revenue of only 136 crore. So what is the right way to look at it? Thanks.
Right, good question. I'll take the second one because it is more conceptual in nature. If you look at the way we look at esports, it is about the marquee tournaments and the professional content. So that's the space which we operate. And that's a definition emanating from the global definition of that any professional tournaments which are free to participate, where the game of skill and the physical strength and the mental strength of the players is being tested, like in Olympic sports. That's what is called esports, and that's how we are kind of really defining the esports. And in terms of 80% is arrived by the prize pool of different tournaments which run in India, because that's a lead indicator of the popularity of the particular IP. And we contribute to 80% of the total prize pool in this country today. And that's how we are at 80% market share. In terms of premium content, which you see on Hotstar, on Boot, on Viacom, MTV and other platforms, almost 100% viewership of premium content comes from us. So these are the two KPIs at which you can look at it. And the definition of 100 million which you're looking at is all encompassing, which you look at the casual games tournament space also, which is not the space we are operating in. So that's one. Second part is in terms of Nodwin's breakup, 55% comes from media rights, 30% or 35% really comes from the white label, IPs which you work with, game publishers, which also subsumes your data services with Steam involved. So you have Tencent, Steam, Valve, Blizzard, Supercell, all of these guys. And roughly around 15% comes from brands which come as sponsors on our marquee IPs. So that's the three breakups.
Understood. And so recently, Krafton also took a stake in Nodwin, right? So if you can highlight, apart from money, how does it help Nodwin going forward? And Krafton is also planning to launch Battlegrounds mobile game on June 18th. So how is Nodwin involved in that?
So Krafton, three things which we really like to really see that. Krafton, as you know, is the world's largest game publisher, and a company investing into an esports company is a very strong endorsement to and signaling to the rest of the global publisher that this is a partner whom they can trust on high quality experiences being created in offline and online. Second thing is Krafton, as you rightly mentioned, with their PUBG relaunch, we hope that at a fair process, but with our quality, we will be able to work very closely with them to build esports, as we were working pre-ban of PUBG with Tencent in India and build a very strong IPs and community for Tencent earlier. So we have that community. We understand what kind of that community really likes, and we know the team also very well. So that is the second thing. Third thing is this really gives us a strategic advantage to build IPs around the games of Krafton, because you are not worried about balance of power between publisher and the sports company, because they are your strategic investor, and hence with them you can launch leagues, franchises, cups in India and other South Asia and other countries where they are interested, and that is also a very, very strong IP building capability or strategic value which can get created.
Understood. Thank you and all the best, sir. Yeah.
Thank you.
Thank you. The next question is from the line of Amit Shah from Ace Securities. Please go ahead.
Hi, sir. So, sir, I have one question. Sir, despite a very strong revenue growth in FY21 on consolidated basis, the revenue for stand business has declined. Can you highlight what has led to this decline despite a very strong performance in consolidation basis?
I thank you for asking this. Actually, I wanted to highlight that our standalone numbers are insignificant and you should not look at them. They contribute to 2% of the overall revenues. The Nazara Technologies Limited, the standalone balance, the P&L is quite a diminishing returns of time for anyone who wishes to analyze it. And they should look at consolidated because, as I mentioned earlier, 39% of our revenue comes from gamified learning, 37.5% from esports, and within 16.5% of telco subscription, which is our own, everything comes from our foreign subsidiaries. So if you were to kind of reanalyze Nazara, please do not look at standalone. And that's my humble request because you will be spending your time on futile activity.
Thank you. The next question is from the line of Arpana Shankar from SBI Mutual Fund. Please go ahead.
Hey, hi. Congratulations on good set of numbers. I have two questions, rather three questions. What are the kind of matrices you look at in the performance of this largest two segments, gamified urban learning and esports? Second question is that what are the factors you look at when you are, deciding to enter new markets or maybe creating new IP? And if I can pitch in into the third, what is the kind of viewership your esports segment has apart from sports player?
Right. Aparnaji, namaskar. Thank you.
Namaskar.
So on the KPI, Aparnaji, as I mentioned in my opening remarks for gamified learning, it's a unit economics KPI besides the growth of monthly paying subs, which is important because the KPIs like churn, your cost per trial, and your ARPU give you a confidence and a lead indicator that your health of the consumer engagement attention is all good and you can continue to spend money and scale business without regressing on unit economics, which means that your future profitability is all intact. You are just ensuring that users are being acquired now. So that is a very, very important three KPIs. I'll just repeat: cost per trial, monthly ARPU, and churn. And these are my lead indicators. The lead indicator -1 is my paying subs, which eventually combination of these two will define and makes a very strong predictability on revenue and EBITDA margins. So that's on gamified learning. On esports, it's important is the number of hours of content produced, number of hours of content broadcasted. That is the two elements because we are a media rights business. The second is how many IPs are we launching, our own and white labeled. That's the second one because that becomes an input to the content piece as well as revenues. And third is what is the cost of the content created per hour. So these are the three KPIs which we look at internally to know what is the thing. On the revenue side, number of partners which you are working with. Partners include publishers, broadcasters, brands, and as we are a B2B2C business, it is important that we are increasing depth and breadth of the partners. So that's on the revenue side. So combination of these four matrices really give you a very strong handle on the P&L of Nodwin. On Sportskeeda, it is very simple. How many visitors growth is happening, how much of time spent is happening, and what's your distribution range of time spent. That is on the user side, and on the revenue side is what is your cost of what is the revenue which you are generating from every inventory, which we call eCPM, and how is that really moving and changing. So combination of these three metrics really help us in Sportskeeda. And I will just kind of answer on freemium also. In freemium, it's about daily active users and how many people are converting from playing to paying. And what is your eCPMs of your inventory. These are the three matrices which are important there, besides the day 30 or day 90 retention. So that's how we see our businesses in three growth segments. To answer your second question, what do we see when you look at new markets? Which is a function of a different the segments. For example, when we are looking at going into new market in esports, we look at what is the kind of games, what is the relationship which we have, what's the size of that market, and can this market eventually help us in building either a large eyeballs or building a dominance so that we can flanker it for anyone not emerging, coming into our territory. For example, expansion into expansion into Sri Lanka, expansion into Bangladesh, in Middle East, and then in future in Africa, is from that perspective that these are the markets which are going to be very big and we need to replicate our playbook of India. For the Kidopia expansion, it is all about the size of market and LTV cap, and which is the same case for the Cricket Championship. To just answer your third question on viewership, our viewership is directly causality to the broadcasting platforms, whether OTT or TV, and we are dependent on them to generate viewership. And our viewership data also gets collated through them, whether it's Bark on MTV or whether it's the YouTube or Hotstar data which we get. So the viewership is an actionable. It's not an item which is completely actionable in our hands, which is why the 4 KPIs which I mentioned does not have a viewership, because it's an derived outcome.
Okay, so then what could be the deliverables for the OTT platform? No, this is an extension. Please allow me. Thanks. So it's not viewership. So what are the deliverables when you have a contract with the OTT platforms like Hotstar or other?
Content. That's what I said. Numbers of content which you create and engagement of that content. Because as a content creator, you can only be measured for the engagement which you create. The distribution is the platform's play, not mine.
Oh, thanks a lot. All the best.
Thank you. The next question is from the line of Shobhit Chatterjee from BNP Paribas Mutual Fund. Please go ahead.
Hi, thanks for taking my question. Just these 2 questions quickly. Firstly, on the business update with regards to Kidopia expansion, we had mentioned that Nazara was doing some work in the European region, Spain, in the country of Spain and Germany. Firstly, question on that. And second is that just to see the financials on a quarter-on-quarter basis, esports has seen a slightly muted response with regards to the revenue side. So revenue, I think, declined from 57 crores to 48.5 crores. So just wanted to know, is there any specific reason or just a one-off?
Yeah, sure. Shabik. So let me answer both. Shabik, on the gamified learning Europe, we have launched German around 2 months back, and we have seen that we are still not able to find a product market fit in terms of LTV cap. So the experiment on iterating what needs to be done both on onboarding funnel and the consumer engagement is still on, and it is not a foregone conclusion either way. And our expansion into Spanish and French is something we will pick it up after we have really kind of taken a conclusive call on German. Then only we will get into it. On the Nordwin piece, Q4 traditionally has been a quarter where we do not organize events because it's exam time for 14 to 21 in India. January, February, March is usually the quarter where we abstain from the activities, and hence Q4 will always be much bigger than Q3, and that's what you are kind of really seeing here. If you look at from a Nordwin's perspective, what they delivered was roughly around, I will just give you exact number. They delivered 432 million in Q3 versus 406 million in Q4. So that's a decline of 6% quarter on quarter, but that's a seasonality, and you will see that seasonality in the past years and coming years also. The second difference in the esports segment, which you would see, is on Sportskeeda. Our quarter 3 in Sportskeeda was very big because of the IPL being shifted from April, May, the market cricket event which is there. We got a one-off bump up in October, November, December in the number of users. Otherwise, you won't see a seasonality of that extent in Q3, Q4 in Sportskeeda, barring little seasonality which comes on account of more advertisers coming in Q3 because of festival season than Q4. So these are the 2 reasons, but Nordwin, which is the larger component of esports segment, you will always see a seasonality between Q3, Q4.
Okay. Thanks a lot.
Thank you. The next question is from the line of Rashid Parekh from Nomura. Please go ahead.
Hi. Thank you guys for taking my question. Manish, Vikas, congrats on a decent year, right? And then congrats on the first call. Just a couple of key points to ponder, right? From a Kiddopia perspective, if you look at the paying subscribers at 340K, looks like a touch lighter than what we might have earlier projected, right? Any reasons, essentially, that you can point out? That's one on Kiddopia. Second, how's the traction in the last 2 months from a US perspective? And third, any guidance that you can provide on the marketing spend that you plan to do in Kiddopia for FY22? I'll come back for esports question.
And all three questions are absolutely is that the US market, if you would have, and Rishit, you know that there has been some changes from 26th April onwards in the Apple policy, right? Those changes are very new. So how much is going to be a marketing spend is a function of recalibration of the market overall in terms of how to really target those users, how to attribute it, and that's what we are really trying to figure out on keeping a range of cost per trial and everything in mind. So that answer, that what will be the marketing spend going forward, will be purely a function of the new normal being established in coming months. In order to answer the past question, if you look at the growth on the monthly paying subscribers is direct causality to the marketing spends which you do, right? In our Q3 marketing spend was much lesser than the Q1 marketing spend last year or the Q4 marketing spend. And as I mentioned earlier, we have been experimenting to see what was the impact of reducing the marketing cost on your net new subscribers. And now we have really understood after playing on all the parameters that what is the sweet spot of marketing spend which one can really look at. So which is why your margins have gone up than what you would have expected, while the net new subscribers have not increased to the extent you have done it. So it's a playoff between the subscriber addition and the margins.
Okay, understood. So largely marketing spends were the one which is and nothing to do with churn. Okay, perfect.
No.
On esports, so looks like I think at the fag end, right? White label drove, and you gave some of that in the commentary as well. That white label drove that part of the business, right? Could you talk about the split that we plan to do in the coming years? I know obviously post normalcy we might have planned to get into some of these IPs, right? So just wanted a split whether it will be 55, 35. Or it will be more geared towards the IP-led businesses, right? And just the last question on fundraise, is any of these subsidiaries plan to raise funds given our cash balance sheet, right, at roughly about 400 crores, 500 crores, right? It might be a little difficult for us to sort of provide those funds and participate in those rounds, right? Any reason we might just end up getting diluted below 50% in any of these subsidiaries in the next year? Thank you.
So, two questions which you asked. On the fundraise, all our companies are really generating cash additions. And at this juncture, if you look at the largest of the paperboat apps, it has a positive working capital and it is adding cash every month on its bank. So for them to really require funding to grow will be a function of either an M&A if we were to plan, and that we can jointly plan and we can fund and create structures where we can help them. So I don't see a dilution really happening until and unless we wish to, and we don't wish to right now. So from that perspective, I don't see any kind of a dilution being envisaged in downstream. And other subsidiaries, we have enough and more cash on our balance sheet to support their growth plans, which we understand could be value accretive, EBITDA accretive, just kind of burning the money, and we have enough and more cash to support our subsidiaries on that front. Your another question was
esports. Was on esports, the split between white label and the IP-led businesses.
Where we sit today, our split is not going to be changing, which is I explained 55, roughly around 30% and 15%. However, we are just at the beginning of the year, and here a lot of opportunities may come in of building white label properties and IPs as this market really grows, including the PUBG Battleground relaunch. And then how the mix is really going to pan out is what we will keep working towards it. But today, what we see a baseline of the mix will be the same as the FY21.
Okay, understood. I'll come back in the queue for follow-up. Thank you.
Thank you. The next question is from the line of Mukul Garg from Motilal Oswal Financial Services. Please go ahead.
Yeah, thanks. Good morning, Nitish, Manish. Manish, two questions from my side. First, a follow-up on the previous one. On Kiddopia, it now clearly seems that the customer addition is a direct function of the marketing spend. So should we expect investments to exceed, revenues at least for the near term and margins to remain under pressure as you add more customers? While we understand that long term, it can be a very good EBITDA margin business. But if you can just through that metric how the margin will play out. And I was not able to understand clearly the change in Apple's privacy policy impact on our investments. How is that something which will impact our ability to spend on new user acquisition? The second question was on Nodwin. Yeah, sorry, go ahead.
No, एक समझा देता हूं, otherwise I'll forget it. So on the Kiddopia, the user acquisition and efficacy of user acquisition happens through your ability to understand the users, understand their affinity or potential affinity for them to become a paying subscribers. And for that, you leverage the platforms like Facebook, Google, who depend upon the device IDs and all that stuff. Apple has recently, after 26th April, said that if the user is not opted in, you can't use the device IDs. And that really impacts these networks in the short term ability to attribute and make the right conclusion about who is this user. And that is where I mentioned that in absence of a right attribution, you can't create a funnel. And we are really looking at how then we measure our cost per trial effectively and how do we have a lever of controlling it and optimizing it. That's what is the work which is on, and that's impacts. The question on the Kiddopia, we believe that I mentioned before, we are not really looking at growing it at the cost of getting into negative EBITDA. We have done our experiments of very high spends, very low spends, and we understand a sweet spot of the marketing spends. And our view is that it has to be a balance between the net new subscriber growth and the EBITDA margins. So we don't see it going into a negative territory at all.
Great. And on the Nodwin side, Nodwin has done extremely well in FY21, despite there were no physical events in the country. What is your view on the direction of the esports market development in India? Is it more an online gaming and OTT content market, or do you think physical event can pick up rapidly once lockdown is over? And how will this impact your cost and ability to increase the share of advertisers over the medium term?
So Mukul, esports business is a business of viewership. Event is a means to the end. And the larger the life the event is, the more premium you can charge for a media right licensing. That's a very simple core loop. So as the consumer base in this country keeps growing, and which is a market building activity, which more mobile game publishers, global publishers coming to India, they seeing a potential of large in-app purchases happening in India as a market. The more such gamers will come, the larger the community will form, and esports will have a compounding effect because it's a symbiotic relationship to mobile game publishing. And it's an extension or a marketing arm for a game publisher to build communities and aspirations, which leads for more people to buy in-app purchase. So keeping that in mind, the market building activity will be in conjunction with mobile game publishers and esports, Nodwin, because Nodwin is the market leader in that space. And that's what will continue to grow. And hence when I answered to Aparna ji in terms of KPI, number of partners, number of publishers is a very important thing because it's an ecosystem development which can happen through partners. In terms of events, as I mentioned, is a very effective tool to build memories and experiences. And especially when you have offline events happening, you have hardcore fans really coming and doing it. We all miss it as esports fans. We believe that's very important for the growth having such physical events in top 50 cities of this country. As and when COVID really happens, we would be very keen to restart that, because that is going to be very important key aspect to build foundation of esports. Yes, there is a cost, there is a margin, which is why I mentioned earlier that 11, 12, 13% margins are not the margins which we will like to aim for in this business. We will like to have in more building in new IPs and building more offline plus online experiences, so that we can create more viewership, which ultimately has a positive effect on our revenues.
Great. Thanks. And if you allow me luxury, a conceptual question on the M&A side. Are you seeing any change in the funding environment in the Indian gaming space? Any VC money which is coming in now? Earlier, obviously, you benefited from being the funder of the last resort. So is this something which you are seeing of late?
I think, even the last couple of years, you see, or last 2-3 years, while we have, done the acquisitions, there has been inflow of investments into gaming in India, and I think that will continue. So I would not say that, while we did these last transactions, there was no competition in terms of VCs. But I think, the original premise of how can we bring together these companies to create 1 + 1 is equal to more than 2, and create significant value. 3 years back or 4 years back was a concept. I think last 3-4 years we have been kind of, being able to walk the talk and show ample evidence of how this not only benefits Nazara, but also the companies that join this network and the founders and the managements. So I believe these strong case studies will actually come to a lot of our advantage as we go forward on this strategy.
Understood. Great. Thanks a lot for answering my question, and best of luck for next few years as you guys grow.
Thanks, Mukul. Thank you so much.
Thank you. The next question is from the line of Abhijit Purohit from Phillip Capital. Please go.
Yeah. Hi. Thanks for taking my question. Am I audible?
Yes, you are.
Yeah. Good morning to everyone out there. I hope everyone is safe and in good health. I just have one broader question that's on our esports segment. So now, given the number of gamers and viewers that are kicking in and the kind of streaming we see on YouTube and other platforms, do you think that we are about to witness the beginning of something very big in future, given this demographic shift and our current dominating position in esports segment?
Vijay, it's like music to my ears, because I've been really wanting to hear somebody's really saying that this is be very big. I've always maintained that in the sports entertainment pie, esports will become the second largest after cricket in 5 years, 7 years, 10 years, 3 years, I don't know. But that is going to happen. The question is when. And our simple thesis is that the premium content will become really, really important, because there'll be multiplicity of these platforms who will want the premium content. There'll be TV guys who will be bidding for it, because this will be a 200, 300 million audiences who are going to look at this. The nature of esports is a very fast-paced, because we saw a test match to 1 day to 3 hours. This is 20 minutes. And you are getting the same the thrill and edge of the seat, plus passion and following a fan or a team. All of that concoction is there and getting done in 20 minutes, and again starts, which gives you amazing kind of ride of emotions and the conversations for you to keep doing it. So that's what our belief is, and that's why we are very positive about the esports entertainment media kind of business. And for that, building larger than life esports IPs is one of the very strong moat which we have created, besides the network effect of being the preferred partner of game publishers, brands, and OTT platform, which creates a very strong entry barrier.
Right. Thank you so much for answering my question. All the best for the future endeavors.
Thank you.
Thank you. The next question is from the line of Pratik Kumar from Antique Stock Broking. Please go ahead.
Yeah, good morning, everyone. Thanks for the opportunity. I also have a very broad question to with the current set of businesses like growing at X pace. So, what is the kind of growth we are looking at like in FY20? And could there be any material acquisition which can also like sort of boost our FY22 revenue in a significant way?
Two things. A, the growth momentum is really what we have created, and the segments have a large addressable market, and these are macro consumer trends which are not really going anywhere. They'll continue to accelerate. So we will like to ride on those trends and continue to increase that addressable opportunity. How much of that growth is going to happen is also a function of the growth of the market and the propensity and proclivity of users to pay. I think both of these factors is kind of a very, very strong input to our growth, and that's why it's very difficult for us to kind of give a guidance and predict a particular number. The second thing is, as Nitish mentioned, Friends of Nazara Network is not just a moniker for us, it's a strategy. If you see since 2017, we have consistently been doing a strategic acquisition every year. 17 Next Wave, 18 Nodwin, 19 Sportskeeda, 20 Paperboat. And that's how we will continue to really acquire companies, grow them, scale them. And that is something which we will be very, very working actively towards in the coming year, and not just in coming year, but in the years to come.
Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Pranav Kshatriya from Edelweiss. Please go ahead.
Hi, thanks for the opportunity. I have two questions. Firstly, on capital allocation, I mean, you touched upon in the previous answer, but what are the focus areas for the company? Which are the areas where there are good opportunities and good growth prospect? Second question is on the freemium side. If I look at the growth is sort of weak. I mean, despite being the number one cricket platform, the DAUs is sort of trending down, and we are not really seeing a strong growth there. So I mean, and this is one segment which I believe should drive growth. I mean, in-app purchases should increase, the engagement should increase, but there is hardly any growth. So what exactly is happening there? Thank you.
Manish, let me take that.
Okay.
Yeah. Hi. So let me answer the second question first. On the premium side, right? As you know, we own World Cricket Championship, which is probably the most popular cricket game in the world, with over 15 million active monthly users. Now, the reason we are not seeing immediate growth in terms of revenues or scale up in users is because our very strong focus is on achieving a positive lifetime value versus cost of customer acquisition equation in this model. Like you rightly said, the biggest revenue drivers for the premium business, or also for World Cricket Championship, will come through in-app purchase and not advertising. This is where the team is working on getting the in-app purchase conversions, scaled up. They released WCC 3, which was a new version of the game after WCC 2, about 6 months back. And in the last 6 months, we have seen in-app purchase conversion increase from 0.01% of daily active users to now almost 0.10% of daily active users. It's almost an 10x increase. However, to get a positive LTV CAC, we still need to further increase this, and the team is actively working on iterations to achieve the goal. Today, we get nearly 100,000 free downloads of WCC from the app stores, and therefore we have sufficient scale to be able to simulate and deploy our iterations to achieve our objective of positive LTV. Once we have achieved that goal, you will find that, like in the case of Ethiopia that we did, we will significantly accelerate the spends to acquire the user base and scale the user base significantly. So I think that is what we are working on, because this is true to our DNA that I spoke earlier, that we do not like to chase vanity metrics and burning money. We like to first get our unit metrics in control and then only scale. So that is what's happening on the premium side. In terms of your question on capital allocation and which are the directions we really like, I think we found the gamified learning space to be very exciting. We've seen great success in the 2 to 7 year old segment, and I think it's natural for us to actively expand that beyond that to perhaps the next segment, which is the 8 to 12 year old kids, and we will be actively looking at that space. We are also actively looking at the premium space again because we believe that the talent in India for game development studios has significantly improved over the last several years, and the ability for Indian gaming companies to deliver world-class gaming content for India or the global markets has now become a reality, and you will see this as a very large opportunity coming up in the next few years. So we are going to definitely double down in that space as well.
Just small follow-up on that. I mean, are we going to see more investment, of Nazara as a global platform where you actually cater to the requirements of the global audience, or it will be more a platform where you basically are tapping for the growth in India?
Sure. So as you see, our revenue mix today, right, comes from today's revenue broadly 40% from India, 40% from US, and 20% from the rest of the world. We believe India will continue to be a very high growth market for us, and we will obviously double down our focus in this market. But at the same time, we are going to continue with global expansion as well.
Okay, great. Thank you so much.
Thank you. The next question is from the line of Amit Chandra from HDFC Securities. Please go ahead.
Yeah, hello. Yeah, so thanks for the opportunity. All my questions have been answered. So only one part on the this thing, on the telco subscription business. So it's around 17-18% of our revenues, and obviously the fall this percentage has come down. But what is our strategy here, and also the outlook for FY22 on this segment, and also on the EBITDA margins which have actually come down in FY21 for this segment.
So Amit, this is Manish here. If you look at the telco subscription segment, I mentioned in my remarks that entire corporate cost is being allocated to this segment, and that is why you see the EBITDA margins have come down, because your revenues base has declined and there has been increase in the manpower cost at the corporate. However, if you were to kind of segregate it independently, the operation EBITDA margins for this business haven't come down. They've stayed where they were. In order to answer your question of what is the outlook, as I mentioned before, that here the strategic asset which we have is the relationship with 58 telcos in 52 countries. And that is the pipelines which are there. And now we are really looking at how to leverage that asset by putting premium content like Disney and Star Wars or esports content to see if we can really monetize that distribution channels which we have created. And that's the endeavor for this year, and we are looking at if we can convert that into revenues. However, it's very early for us to say and predict that whether that will lead to a growth in this segment, and hence we are maintaining that this would be a flat segment for us and not being a growth driver.
Okay, sir. Thanks and all the best.
Thank you. The next question is from the line of Rishi Jhunjhunwala from IIFL. Please go ahead.
Yeah, thanks for the opportunity. I have three questions. Firstly, we have taken some impairment charges in this quarter and the previous one. If you can just elaborate on that. Secondly, can you talk about what kind of fund infusion we have done on the Hala Play side, if at all, and how do we think that playing out, given that we have otherwise been a bit skeptical on scaling up that business given the regulatory risk. And thirdly, you elaborated a bit on the risk around Apple's privacy policy changes in April. how do you think that could potentially play out, given that a lot of the user acquisition, at least on a trial basis, is driven by targeted performance marketing, and as a result, what are the other ways in which you could potentially offset some of the impact that could have? Thank you.
Thanks, Rishi. Good to hear you. On the impairment side, as you would have read in our DRHP also, we had done few startup investments, which were pre-0 to 1, very, very early stage incubation kind of startup investments, where we had done some virtual reality company, 1 crore of investment there. We had looked at it, some aggregation of tier 2 women gamers, and we had done some 75 lakhs there. We had looked at a cruising company and looking at how can that pan out. Some of these, which were early pre-product market fit kind of investments, which have not panned out, we took a conservative call and said that let's kind of impair it while we continue to work with the founders on trying to see if we can establish 0 to 1. But from an accounting point of view, we wanted to clean and move on. And that's where you see that impairment in this year, full year of roughly 40 million rupees INR, you would notice in our accounts. Second question is infusion in Hala Play. In the infusion in Hala Play was to really kind of take a dominant shareholding in Hala Play in line with our thought process that this is not an area where we would like to burn money. We will not like to invest in massive amount of money in brand building, consumer acquisition. And the founders wanted to really look at a new kind of a segment and not really look at a very wait and watch kind of a strategy. So we gave them exit, and we invested into Hala Play and took the 75% majority, which you see in a controlling stake changing. The third one on the Apple piece, I think that's fundamentally the question there is, how do you attribute a new user? And it's the attribution problem statement, which there are very, very large companies like AppsFlyer, very large ad networks like ironSource, Unity, Facebook, Google, they are all working on it. And our view is that it is a level playing field for all game publishers, not just us. And hence, whatever opportunities will emerge, it will emerge for everyone. It's not a localized problem statement, it's an industry problem statement. And given that copious amount of tech brains are working hard to really create new attribution, and Apple also coming out with its own solutions, I think it's a few weeks, few months time period where the new attribution ways will emerge and how to do that, respecting the privacy of the user. Secondly, this also gives us an opportunity to broad base our marketing spends beyond Apple, Google, and Facebook platforms into other platforms, and which is where we are really tapping and experimenting as we speak.
So does that change your budget estimate for marketing for FY22 versus what you could have earlier anticipated, and as a result, your LTV to CAC?
So there are two ways to look at it. One is you can say that I will be very flexible on your LTV CAC, and I will go ahead and spend a lot of money and look at it. Our approach is slightly different. We will keep the same yardsticks and keep working and optimizing the various ad networks platforms to find where is that sweet spot. Okay. And rather than kind of regressing on the KPIs. Now, what could be the impact? That could be an impact on the quantum of spends, which we may be able to do in the near term. And that is something which we are working and figuring out how to find alternates while working with Google and Facebook, or are they working on the platform?
All right. Thank you so much, all the best.
Thank you. The next question is from the line of Sonal Minhas from Prescient Capital. Please go ahead.
Hi Manish, Sonal this side. I hope I'm audible. Just had two questions. One was from an investor perspective, trying to figure out if you could basically attribute and forecast what percentage of top line would advertising cost be on a regular or normative basis for the business? And is there a benchmark that the company follows for the overall P&L? I'm asking this just to understand if there is some linearity in ad cost as a percentage of sale, which we as investors can see and focus. That's one. And I think secondly, you did speak about the margins of the esport business a little bit higher. So it's linked to the sustainability of margins of the 5 buckets that we are in of businesses, and not asking any numbers there, but do you see these margins holding true or becoming better, maybe from an FY22 or an FY23 perspective? So these are 2 questions.
Perfect. So on the attribution of advertising, if you see, advertising today is 55% broadly of our revenue.
Yeah.
And the largest component of advertising comes from the Kiddopia and ad spends. And as we have discussed on this call, it's a very linear equation between how much of marketing spend you're doing and how much is your net new subscriber growth is happening. Because there is a churn is constant, and the number of new users which you added to the system will directly be proportional to net new subscribers. And that again is directly proportional to your revenue. However, as I mentioned earlier, you account for that marketing spend in the same month while revenues get deferred because your annual revenues is 30% and they get accounted in accounts for over 12 months rather than the same month. So good. So given that unit economics is something which we have very, very strong Hawkeye focus, marketing is the only, to answer your question, is a linear attribution to what could be on net new subscribers rather than having a linkage to the revenue in that same month.
Okay. So if we were to look at it, just the advertising cost on an absolute basis, which is 226-27 crores this year, and I'm assuming 35% of the top line is the Kiddopia business. Is the marketing attributable to Kiddopia also 35-40% of the overall advertising cost? Is that a way to understand that,
Yes.
or we are spending disproportionately right now, and the sales will catch up in the next year?
So if, as I mentioned on the Kiddopia business, your EBITDA margins for the full year were 7%, right? For the last year, it was minus 18%. When the EBITDA is minus, you understand that marketing is being spent in order to upfront acquire users, and that revenue will come later. What we have really looked at is that we will not have an EBITDA negative margin at all in this business because at steady state, it's a very 20-22% EBITDA margin. Right? So marketing we will use in a judicious, prudent manner to drive revenue growth as well as the EBITDA margins, and don't go into negative.
Okay.
Yeah. Okay. So that is one. Second is on the esports bit, which you spoke about, that what could be the margins?
Yes.
What could be the margins? I think, fundamentally, esports is a very nascent business in India itself, not just us. And we are the market leader. So there, the opportunity is very big, and not just in India, but in South Asia, Middle East, Africa. We like to invest in building new IPs, and we would like to invest in making our current IPs more larger than life. Because the larger than life IPs and the larger share of IPs are both very strong inputs for you to continue to have strong moats for your leadership as the market grows. And that is a very, very high causality on your ability to charge revenues later on. We do not capitalize them. We fully OPEX them, which is where your margins, I'm again saying that building new IPs is a 3 to 4 year break-even phenomenon. And that's where your margins would be lesser. Here again, given the DNA which we have, we will not have a negative EBITDA margin business, but we do not want to maximize EBITDA margins here right now for the investing into strategic IP creation or capability creation.
Got it. So if I were to just understand this, that we are basically trying to create some EBITDA positive margin buffer, is it fair and we are not going to invest any further in luck-based games where I think we are where the EBITDA is negative? Is it fair to say that we would be in like 5, 6, 7% EBITDA margins for FY22-23 since we are in the investment phase for both these leading businesses?
It's difficult to predict that, as I mentioned earlier on the call. quantum of investment into new IPs and the offline events in NODWIN are directly functional to the menace of COVID around us. And if we don't do that, our EBITDA margins will be higher. Similarly, in the gamified learning business, which is a large one, as we were discussing with Rishi, the quantum of investment into marketing is also a function of how soon can we hit a new normal of attribution so that we can really optimize the onboarding funnel. So these two factors are unknown factors as of now for me to tell you that what could be the right number to look at EBITDA margins going forward.
Okay, Manish. All right. Okay. Thanks a lot. This is from my side. Thank you.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question. I now hand the conference over to Mr. Nitish Mittersain for closing comments. Over to you, sir.
Thank you very much for that. Thank you everyone for participating. Like I said earlier when I introduced that we believe this decade is the decade of gaming in India. At Nazara, we persevered for 20 years pursuing this dream that India will one day be big in gaming. We find that it's a lot more tangible today. We are on the right path, and at Nazara, we will continue to pursue this dream with maximum conviction and efforts as we can. Thank you very much.
Thank you. Ladies and gentlemen, on behalf of Nazara Technologies Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.